So in our last video, we have discussed the objectives of a post-clearance audit. And for this video, we are going to proceed and discuss now the benefits which can be derived from a post-clearance audit. And these benefits have been enumerated in the WCO guidelines for post-clearance audit, and these benefits are as follows. So number one, compliant trade is facilitated at the point of customs clearance and border controls can be reduced. So when we say compliant trade, we mean trade, import or export, which complies with or which does not violate the relevant customs laws, rules, and regulations. So how does post-clearance audit encourage or facilitate compliant trade? It does so because, as we will later on learn in our CAO 1-2019, customs laws impose necessary penalties for violations thereof, which can be discovered during the post-clearance audit. So when violations are discovered during post-clearance audit, the auditee or the subject of the audit will be sanctioned accordingly, and this sanction or this penalty will be or serves as deterrent, or this prevents future violations of customs laws, rules, and regulations. So in that sense, compliant trade is facilitated or encouraged by post-clearance audit. Second, post-clearance audit enables customs to gain better information on and understanding of the trader's business. Later on, as we discuss CAO 1-2019, we will enumerate the documents which are required to be kept both by the importer and by the customs broker. And as we examine the list of documents required to be kept and which may be the subject of audit, we will later on learn that these documents do not only cover documents or aspects in relation to importation of the goods by the importer. Rather, it encompasses a wide array of information regarding the business, including accounting and financial information. So in that sense, customs or the Bureau of Customs gains better information and understanding of the trader's business. Third, risk levels can be more easily assessed and reviewed. A premises visit provides the opportunity to identify risks and weaknesses in trader systems. So when we talk about risks, in this context, we talk about risk that the importer may have been or may be committing violations of customs laws, rules, or regulations. So that risk, the risk that the importer could possibly be committing violation, is being assessed through customs audit. It is also being reviewed. Customs, by undertaking this audit, is able to identify or assess the likelihood that the importer is committing or will tend to commit violations of customs laws in the future. Number 4, post-clearance audit also facilitates client education, long-term and comprehensive compliance management focus. So when we say compliance management focus is being encouraged, it means that importers are being encouraged to comply or do their importations in compliance with customs laws, rules, and regulations. We will later on learn that there is such a thing as a prior disclosure program, wherein importers are not penalized or are not punished if they come forward with information that they should have come forward with in the first place. So compliance is encouraged, compliance is being facilitated through post-clearance audit. Fifth, customs administration's resources are more effectively deployed. So when we talk about these resources, for instance, we talk about the Bureau of Customs here in the Philippines. The Bureau of Customs here in the Philippines has limited resources. When we talk about its resources, we are referring to its manpower, to its budget, to its funds, and any other resource which may be used for collection purposes and for audit purposes. Admittedly, these resources are not sufficient to audit and to cover each and every importer in this country. So with the system put in place by CAO 1-2019 and by the CMTA, potential auditees are identified in accordance with their risks, and the Bureau of Customs allocates its resources, manpower, its time, and its funding to an audit which will more likely yield to better collection results. So again, to emphasize, the Bureau of Customs cannot audit each and every importer. So what it does is that it allocates its resources properly, whether it be time, human resources, or money. Next, customs can promote the concept of voluntary compliance and self-assessment. We have discussed the concept of self-assessment in our previous video, so we will no longer touch on that in this video. But nevertheless, as I mentioned earlier, there is this concept of prior disclosure program under CAO 1-2019, which encourages importers not only to compute their duties and taxes correctly and pay them accordingly, but it also encourages them to come clean and come forward with information which is accurate after all. So in the event that an importer makes a mistake in his or her declaration, he is given the opportunity to correct such mistakes without the penalty being accorded to the usual violations. 7. Suspected fraudulent activities, including cases of illicit financial flows, trade-based money laundering, may be identified and referred to competent authorities and/or enforcement unit for appropriate action. You will later on see, as we discuss CAO 1-2019, that among the records required to be kept by the broker and/or by the importer are those financial records which are relevant to its operations. So in the course of audit, using these documents as tools, certain violations of money laundering cases or other financial violations may be discovered, in which case these potential violations or suspected violations are referred to the authorities accordingly. So this may also be discovered during the course of a post-clearance audit and may be referred accordingly to proper authorities. Last, proper post-clearance audit also provides a platform for evaluating continued entitlement to authorized economic operator status where applicable. So just to refresh our memory, when we talk about authorized economic operator, we are talking about AEO as defined under the Customs Modernization and Tariff Act as follows. It refers to the importer, exporter, customs broker, forwarder, freight forwarder, transport provider, and any other entity duly accredited by the Bureau, meaning the Bureau of Customs, based on the World Customs Organization framework of standards to secure and facilitate global trade, the revised Kyoto Convention, the WCO Supply Chain Management Guidelines, and the various national best practices to promote trade facilitation and to provide a seamless movement of goods across borders through secure international trade supply chains with the use of risk management and modern technology. Going back, so when we say that post-clearance audit provides a platform for evaluating continued entitlement to AEO status, we refer to its accreditation with the Bureau of Customs. So for example, an importer is accredited with the Bureau of Customs, and post-clearance audit determines whether or not that importer deserves to continue with its accredited status. So when violations are discovered during post-clearance audit, chances are its accreditation may likewise be affected. It may be possibly suspended or possibly revoked depending on the gravity of the violation discovered during post-clearance audit. So when we talk about post-clearance audit being a tool for determining entitlement to continued AEO status, we refer to its accreditation with the Bureau of Customs as defined under the CMTA.